I'm here again with Bob Nolan, who's a managing partner of Halyard Capital. Bob, really appreciate you taking the time. So Bob, right now, a lot of people, younger people working in investment banking are trying to figure out whether or not to go into private equity versus venture capital. Venture capital is a lot of fun because you're dealing with young startup companies. Private equity is usually older industries. Do you have a view on that?
First of all, let's be perfectly frank. For the young person, venture capital is the siren song of today's marketplace. It's particularly attractive because everyone has an idea. We all come to the table with an idea of what we think would succeed, whether it's in the consumer behavior arena, maybe it's e-commerce, but just as consumers, we believe we know certain sectors. And that's true particularly of students of a college age or just thereafter. And today, they're allowed to live that dream, much more so than we were. So kudos to them. And obviously, it has become quite an attractive outlet in terms of venture capital. I would say this, though, as to the distinction between the two. I've always thought, and I've invested in both arenas, I've always thought the trick to venture capital was that you needed to understand the distinction between what was a product or a service and what could be made into a company. Now, today, it's a little bit clearer, but in the older days, honestly, the quicker you could identify what was a product or a service, the quicker you knew that you had to put that into someone else's hands by way of sale. And of course, then all your energies went towards making sure that you're properly positioning it to do so. If you're building a company, which is much more private equity-like, you need to make that distinction early in the venture capital game because you're then looking to fill holes, what you don't have in place. Could be talent-based, could be distribution, could be product or service, and you need to put all of that together. But the sooner you do it, the better you'll be at venture capital investing. And the last point about venture capital, they all bring the same approach from one aspect. They all try and measure market share in the aggregate. And they will constantly mention that all you need to do is acquire a sliver of that share and you'll be immensely profitable and productive as a company. Well, that's always nice to be able to argue from the It's deductive reasoning. You're arguing from the general to the specific, and knowing the size of the market and thinking you only require a certain sliver in order to be successful is a very enticing notion to anyone. I would say private equity goes about that a lot differently. They look at that same pie and they realize how hard it is to expand the slice within the pie that you may have momentarily. And so they're constantly focused on building it. Now, they're dealing with larger dollars more often than not out of the box, but today venture capital has raised a lot more money and they put more money to work. So it has changed the paradigm a little bit in terms of the distinction between the two.
In terms of the cost of education now, it's through the roof. To send a kid to college, for my kids, it's going to be $100,000 a year. It's crazy. Any views?
Yeah, I do. And I share everything that you just stated. Because particularly, let's pick on education for a second. That post-secondary model is broken. The average cost, to your point, let's say it's in the low 60s for the types of schools that you may be considering for your children. Low 60,000. That is above the median income level. Let's be clear about that. Yeah. The median income level is a pre-tax number. The educational cost is a post-tax number, and the educational cost is above the median income. So you've already disqualified a large component of our population unless you subsidize them. And to your point, the subsidies won't last. It's an inverted pyramid. Most of these successful educational institutions are subsidized in the tune of 70 to 80% of the students. They're not in full, but in part, if not, and obviously a good number of them full. Right. So I have a huge concern about our educational model. And that's why things like these, what they call MOOCs, these multi-online offerings that are being spread worldwide are happening. There's going to be so much more online learning. And that may be your only saving grace to the rapid escalation of tuition pricing, is that there'll be more online and maybe less brick and mortar required, which hopefully would keep pricing a little bit more in line.
We got a new president coming in, in the next year or so. What would you like to see them do?
Where do we start? I mean, first of all, we have a broken healthcare system. I know, forget whether you like Obamacare or don't like Obamacare. There's a reason that was even addressed in the first time. Too many uninsured. We all agree. We need to bring rational thought to our healthcare system, and particularly because you have an aging population. Who's going to pay for them? The second, obviously, the entitlements. We cannot bankrupt the entitlement system. I personally believe we're going to see means testing of the outcome of those. So folks who don't necessarily need the Social Security because they're wealthy in their own right, it's not unfair to means test that outcome. I mean, I say that as someone who's funded Social Security my entire existence. Yeah. But having done that, I think it's a fairness test at some point. Either we're all in this together or we're not. Mm-hmm. But I think comes back to that notion. And lastly, on the financial side, obviously, I'd like to see more job growth. I think we all would. You can't mandate it, but we could be doing more on the infrastructure side. I really believe that. And private industry needs to play a role in that so that we're not talking about government sponsorship or funding.
Next, what we'd like to talk about are Bob Nolan's truisms, which he said date way back. Bob, you talk about yogiism. It's too crowded. Nobody goes there anymore.
Okay.
Elaborate.
So that was meant to indicate that in order to find companies or opportunities of value, it isn't always found in the topical area. So as we were talking about earlier, there are frothy areas in this economy, and those areas are being bid up by private investors. So one then needs to look at areas that are downtrodden, that aren't as frothy, where people aren't there all the time, as Yogi was pointing out. And so those are the areas that we so value. So we've probably made our greatest returns on situations where we've gone in, bought divisions or companies that were undervalued, or more importantly, had been fallen angels within that current structure, bought them away from a company, and then restored them to their prior health, and then some. Got it. And so looking away from the maddening crowd is a good idea.
Got you. Okay, good judgment comes from experience, and experience comes from bad judgment. Love that.
Well, there's one item that you should always remember. You want that bad judgment to be an experience by someone else, and you want to learn from afar. So the more that you can learn, by, if not osmosis, by extension, the better served you'll be when it comes to bad judgment. But do not expect to avoid the bad experience resulting from bad judgment. You just need to have someone else experience it before you.
I love this one. It's not about the money. It's always about the money.
I think we both know that. Do not fall in love with your companies. We're not, as I like to say, an eleemosynary institution. It's very simple in our world. Our business is about rotation of capital. We obviously entice capital in terms of fundraising, and we turn around and return it as fast as possible in order to generate returns and generate the notion of more fundraising. So the idea that we're not in this and that we're not about the money, that is ludicrous. Do we want to do good and do well? Yes, of course. And we do have a social agenda, and we do create jobs because we're in the growth element of the private equity world in the growth sector. But all that being said, it is our job to deliver returns. So it's absolutely about the capital.
I love it. Do not push water uphill.
Pushing water uphill, again, honestly is a phrase for identifying the reality. Just understand the situation. Do not pursue a business if you have any real concern. Even though you may like it intuitively, if you don't believe you can build a business model that makes sense, do not spend the time. And people fall in love easily, as you know, with ideas, but they have to be executable.
Okay, and then another yogiism, when you come to a fork in the road, take it.
Yeah, in our world, because we have a limited amount of time, we have to be decisive. You need to be careful with that decisiveness because it can be used against you. You want to lead with your chin, but having said that, you need to take action. You need to move quickly, and you need to be able to pursue an opportunity as soon as you see it. And that's something that you just can't take time in when it comes to investing. There's just too many others who might come upon the opportunity.
Your world and the way you grew up and your business experience and what you've been through is going to be a lot different than for those graduating today. What sort of advice would you give kids?
Well, and I touched on this a little bit about what I think is most valuable for the world of private equity in any case. I would tell them to honestly, to craft as broad a skill set as they can before they come to the world of investing. There's so many today that have very directed and designated concepts on how they should go about their business career. That was antithetical to those of us who grew up in our time frame, where quite honestly, we were all about getting as broad an experience and understanding the world at the time. Today, it's much more directed. That's neither bad nor good, it's just different. But what it can do is limit your perspective. And you need to find ways to gain as much perspective as you can. Understanding an industry, understanding ideas is great. But if you don't bring an outside view to that, I don't think you're really that valuable in the context of the conversation. So what I would suggest to the young people is don't be afraid to go off and have a liberal arts background. Be a student of the School of Foreign Service in the case of Georgetown. The valuable effort, the valuable knowledge, information that you glean from that experience will be useful to you later in life as an investor if that's where you care to be. But it isn't about just having one path. It's about having a broad path and a broad approach to your success.
Again, I'm here with Bob Nolan, who is the managing partner of Halyard Capital. And Bob, really appreciate you taking the time. It's been a delight and can't thank you enough.
Skitty, my pleasure.